another episode of Stock Talk. If you guys are new to my channel, thank you so much for joining. My name is Julie, and in today's episode, I would like to give you 4 dividend stocks that have just increased their dividend payout. But before I do that, I would like to ask you, if you guys get anything out of this video, please be sure to hit that like button on your way out. And if you haven't already, be sure to subscribe to my channel. I would greatly appreciate that. But let's dive right into it. So the first stock for today is actually a specialty REIT, and it's a specialty REIT in all the senses. It actually specializes exclusively in owning properties that cultivate and produce marijuana, and this REIT is called Innovative Industrial Properties. Now, being that this is a marijuana REIT, you might not be interested in investing and listening about this at all, which is quite all right. So I'm actually going to timestamp this video so you can actually just go below and then move on to the next stock. They're first launched in 2016 and they have their headquarters in California, San Diego to be exact. And shortly after going into business, they IPO'd on the stock market, which was November of 2017. Now their IPO price was right around $20, and for the first year, we can see that they actually fell below their initial IPO price, and it took them about a year before they broke out of the IPO price of $20 and reached a high of $37. Now today, 5 years later, it's actually trading right around $200. Now, if you guys wish you had invested in the stock 5 years ago when it was initially trading at $20 and now it's trading at $200, and you thought, oh my God, I could have had like a 1,300% increase in my portfolio. Well, don't worry, because I think it's not too late to enter into the stock, because there isn't any other cannabis related REITs authorized right now that are listed on the New York Exchange or the NASDAQ that does what this REIT does. So they have the leverage in this market. Additionally, they're paying a nice dividend yield, and they just raised the dividend yield by 17%, and they will be paying out $1.75 per share per quarter. So they just announced that on March 14th, and the ex-dividend date is going to be on March 30th. So if you want to take advantage of this dividend payout, you do have to own shares by March 30th. And then the payout date is actually going to be on April 14th to be exact. The stock currently has an outperform rating with a strong buy rating and an average price target of $262. That also gives you a 30% upside potential from here. In addition, with the dividend payout, I think this looks very attractive. In its last Q4 results, the trust posted revenues and normalized their adjusted funds from operations per share of $58.9 million and $1.85, which is an increase of 59% and 42%, which these rates were even accelerated from their Q3 revenue of 56.9% and 33.6%. Additionally, the growth has been supported by completing 31 acquisitions since the beginning of October of last year, and their contractual rental escalations at several of its properties. So to me, this is a stock that I think has lots more room to go, especially since this is the only one in its area. But let's move on to my next stock. My next stock for today is Williams-Sonoma, and the ticker symbol for that is WSM. Now, Williams-Sonoma engages in the business of retailing home products. It operates through the e-commerce and retail segment. The e-commerce segment comprises of the following merchandising strategies. It has the Williams-Sonoma, the Pottery Barn for Kids, the West Elm, the BPT, Williams-Sonoma Home, and Mark & Graham, which markets its products through its e-commerce website and direct mail catalogs. And the retail segment includes franchise operations, which sells its products through its retail stores. Now, this company was founded by Charles E. Williams in September of 1956, and it has its headquarters also in California, San Francisco. So this company has been around for quite some time. Now, currently, this stock is trading right around 157, and it has an outperform rating with an average price target of $183. So that gives you roughly a 16% upside potential from here. And they just recently announced that they're going to be raising their dividend payout by almost 10%. So starting in April, they're going to be paying out 78 cents per share per quarter, which would put them at a dividend yield of roughly 1.7%. And looking at the history, you can see that it has been raising the dividend for quite some time now. So this is also something really nice to look at. Their payout ratio is very low. It's only 17.4%. So that is incredible. So definitely there's room for increase in their dividend amount. But let's move on to the next stock. I don't want to make this video too long for tonight. My next stock on my list is Best Buy. And Best Buy actually just increased their dividend on March 22nd which was today. They increased it by 26% from 70 cents to 88%. And Best Buy is one of the stocks I had mentioned in one of my other videos. It's currently sitting on the 200-day moving average at a price of $99. Now, the analysts are actually liking the stock and giving it an average price target of $122, which represents a 23% upside potential from here, and it has a moderate buy rating. With a nice dividend yield of almost 3% and a 23% upside potential, I think this checks off all the boxes. Now again, if the stock does fall a little bit after you purchase this stock, then you can always average into this position if you are looking to holding these long term. And you may or may not know the company's been around since 1966 and actually has not missed their earnings since 2018, which is quite remarkable. And the last stock for today is Vail Resorts, which Vail Resorts operates in 3 segments. It operates in mountain lodging and real estate. Now, the mountain segment covers the operation of mountain resorts or ski areas and related activities. The lodging segment includes ownership of hotels, condominium management, and Colorado resort ground transportation, as well as mountain resort golf courses. Now, the real estate segment holds real property at mountain resorts primarily through Summit and Eagle counties in Colorado. And this company was actually founded in 1957 and has its headquarters in Broomfield, California. It actually has resorts all through the United States as well as in Canada and Australia. Now, this company just recently announced that they're going to be investing $175 million incremental throughout the year into their employees. With that $175 million, they're going to be increasing the minimum wage to at least $20 per hour across each of their 37 North American resorts and raising hourly wages on an average of 30%. In addition, they are also going to be spending $300 million single-year investment into the mountain experience with 21 new lifts across their 14 resorts. So they're really trying to attract their customer experience. They're also going to offer a deferred payment option that's available for 22 and 23, which has Epic Flex payment, which is powered by Uplift and also offers 0 down payment as well as 0 interest. And when purchased early, also 0 payments until September. So they're really doing a lot to enhance the experience for their customers. Now, this stock is currently hovering over the 200-day moving average. It's sitting at $263. And the analysts are giving this a moderate price target of $305, which leaves you with almost 16% upside potential. But this stock actually has raised their dividend by 117%. So they were previously paying out 88 cents per share, and on March 28th, they're going to be paying $1.91 per share. Now, this is a company that was previously paying out dividends and had a stump due to the pandemic, and they just restarted paying out the dividend back in October. Previously, they were paying out quarterly, and then with their recent dividend payout, they're changed it to annually, but now they're paying semi-annually, and they're going to be paying $1.91 semi-annually. And that will give you roughly a dividend yield of 2.9%. So that's quite nice. So anyways, so those are my picks for today. Let me know what you guys think about them. If you guys like any of them, if so, let me know which one. If you don't, that's fine as well. Not every stock I pick is going to be of interest to everyone, so I understand that. But either way, let me know what you guys think. And as always, don't forget to do your own research on any of the stocks that I mentioned. And again, don't forget to hit that like button and subscribe to my channel if you haven't already. I so appreciate that. Anyways, I'll see you guys in my next video. Until then, bye-bye.